Moving from one home to another can be a logistical and fiscal puzzle. In this video, I'm going to talk about bridge loans and how you may be able to use one to simplify transitioning yourself and your equity from your current home to the new home you've been hoping to buy. When you buy a first home, things are really simple. You shop and you find a home and you give notice to your landlord and you move. But the logistics of moving from a home you own already are trickier. You have a few options. You could take the plunge and list your home for sale, sell it, take this leap of faith that the right home is going to come along with the right timing when you need it. But if it doesn't, or the timing doesn't dovetail just right, you could wind up scrambling for interim housing. So you could just plan on that. Sell your home, put your stuff in storage, rent interim housing, but then you've got the expense of storage, the expense and the inconvenience of moving twice. So alternatively, you could hold off on listing your home until you find the home that you want to buy and write a contingent offer. But an offer with a contingency that allows you to sell your old home is going to be a lot less attractive to most sellers. It'll put you at a competitive disadvantage, and in some instances, sellers just won't even consider a contingent offer. So if you can decouple the timing of your sale and your purchase by buying your new home prior to selling your old home, you solve all those logistical issues, but you create a financial puzzle. The equity in your home is tied up and unavailable to use as a down payment on your new home. And if you don't have an alternate source of funding, then you could kind of be back to square one. And this is where bridge loans can step in and kind of save the day. Bridge financing makes for this elegant solution to both the logistical and the financial challenges of a move. A bridge loan allows you to leverage the equity in your current home to buy your new home. And if you have sufficient equity in your old home, you may be able to buy with no cash down payment. There are a lot of bridge loan programs available, and some function just like a home equity line of credit. They allow you to borrow from the equity in your home to make a down payment on your new home from equity rather than from cash. But my favorite bridge loan programs use something called cross-collateralization. And this is a trick that allows us to finance two houses using one loan. When both your old and new homes are the collateral for your loan, you basically get credit for the equity in your current property toward the purchase of your new property. The percent of the aggregate value of both properties that you can borrow varies a little bit. I work with programs that allow up to 80% financing, but 75% is more common. And here's an example to give you an idea of what this would look like. Let's say you're selling a house with a $400,000 value and you owe $100,000 on it, and you're buying a house with a $600,000 purchase price. The value of both properties adds up to $1 million. 75% of that is $750,000. Subtract the $100,000 that you owe, and you have up to $650,000 of bridge financing available. In this example, you would have the option to buy your new $600,000 home with no cash down payment, and there's even room left to finance all of your closing costs. So you could literally buy with zero cash out of pocket. After closing on your bridge loan, you can take your time getting moved from your old home and prepare your old home for the market. Make improvements and stage it and list it looking amazing and sell it for top dollar. And then once you sell your old home, the remaining equity in it is freed up, and you can use this additional equity that you get to pay down the bridge loan. And when you make this substantial principal reduction, you'll have the option to request something called a recast of your payment, or a re-amortization. Recasting adjusts your monthly payment to reflect your new lower principal balance, so you won't get permanently stuck with a large monthly payment based on your temporarily higher mortgage balance. Cross-collateralized bridge loans are a specialized program, and they're offered on a regional basis. The options that I'm talking about and work with are offered in Oregon, Washington, Idaho, Nevada, Utah, New Mexico, and parts of California. But if you've been scratching your head trying to figure out how to kind of take the headache out of a move to a new home, a bridge loan really could be the path to a hassle-free move. If you have any questions about your specific situation, I'd be more than happy to help. You can schedule a call using the link in the description below. I hope this has been helpful info, and thanks for watching.